right, welcome everyone to another installment of The Way It Is. I'm your host, Luca with Remax Service First Realty. And today I am grateful to have, I'm always grateful to have guests, but this guest in particular, we're coming full circle because I knew John Lusink, who is the current president and broker of record at Right at Home Realty Inc. in the Greater Toronto area. And John was a Kingstonian for a little while, well, probably longer than a little while, but I knew John back in the day when him and his wife ran the Baskin-Robbins ice cream store on the corner of Bath and Gardner's Road, and I brought the kids all the time for ice cream. So, right. And then John, though, but I got his bio because I have to, because it's a fairly distinguished one. So he's been more than 34 years in the real estate industry. He's had an award-winning commercial real estate sales career. He's managed corporate offices for one of Canada's most iconic real estate brands, and as well ownership of major residential real estate franchise. He's an active participant in organized real estate. He was a past director of the Toronto Real Estate Board for 6 years, most recently as the commercial director on the 2018 OREA Board of Directors. While he was at TWII, he served as the chairman of the Government Relations Committee for 2 years and was most recently chair of the Finance Committee. So John is not only an accomplished leader, but he's repeatedly distinguished himself in three major areas: mergers and acquisitions, innovative operational solutions, and building high-performance teams. And he prides himself on consistently delivering above-average returns for his stakeholders, and he got his MBA from the University of Fredericton in 2018 and a BA from Queen's University. So welcome, John.
Thank you. It sounds good. I should hang up now.
I did one a couple of weeks ago with the chap we both know, David Greenspan there, the Mindshare podcast. Yes. And he did the same thing. He did the introduction. I went, sorry, is somebody replacing me? Is somebody coming in now? Because who is the guy you just described? But
that's great. No,
anyway, well, thank you for taking the time. And
my pleasure.
I want to tell the audience, and the reason John is here today, is because of our personal connection, but last week I did our half year in review, John, given the crazy market conditions that we've experienced. And John has his finger on the pulse of the market in the GTA. And obviously trends in Kingston get affected by trends in that area. So I thought it was just timely that we had a conversation. So sure. I guess, you tell me what's happening in the GTA right now in the market. What are you seeing?
Well, that is the $10 million question that not only you, but staff, and it seems like every other media person has the same question for me. Just to put it in perspective, when you suggest that I have my finger on the pulse, I have my finger on the right at home pulse. And for those that don't know, so we stretch from Ottawa over to Barrie, through the GTA over to Burlington, Niagara region. And so what that means is we're as a company closing or processing 25,000 plus transactions a year. So this gives us great data, quite frankly. And so what I can see, and I track daily and I get reports daily on sort of incoming transactions, what's happening, where we're going. And so between that and what the movement is in our trust account, I can get a very good idea of what's happening, where we're going. And true to form, which has been reported, we are seeing a slight leveling off. But, I always have to tell people that just means we're going from astronomical to stratospheric, or stratospheric to astronomical, right? I mean, and so, there has been a slight cooling. So instead of 20 people at a multiple offer, there's 5. But what's interesting is, look, price gains continue. I mean, in Toronto and GTA area, prices are up 20% year over year. Detached homes continue to lead that price appreciation level, but condo prices are starting to show some momentum again as well. So,
You,
right. So
yeah, you
this
segued
is,
right in. You segued into that because I knew condos in the start of the pandemic were they took the hardest hit, right? I mean, that became a big vacuum, the whole condo market,
yeah.
right?
And that's a huge part of our business, especially in the GTA and again, that most of that isn't reported in the real estate board stats because I would suggest to you that the MLS boards now probably account for maybe 25% of what goes on out there. And I'll throw this out as a whole separate, that might be another podcast. I think MLS boards are becoming less and less relevant, but I know I'll get in trouble for that, but that's my feeling.
I think you have some
Because
supporters there, but yeah,
yeah, but the pre-construction area is where we've seen huge growth. And yes, you're right. During the pandemic, there was the exodus of students, foreign students, investors. I mean, it kind of all. And don't forget, there was also the new rules that came in about, to do with Airbnb. So all of
yeah,
that, was a perfect storm for that whole sector to kind of grind to a bit of a halt. It's come roaring back. I mean, we have partners that primarily deal with the Asian market and segment of the condo market. They are back full bore, buying, investing. It's just kind of astounding the kind of money that is being dumped back into that sector.
yeah, and and because everybody, here, during the
Mm,
last year and a half, we've been, the byproduct of this was people migrating out of that center
right,
to come to
right.
Kingston or to come to areas like smaller communities like Kingston. And I mean, it's happened north of the GTA as well. And
Right.
where, they didn't want to do commuting, and this whole work at home thing now became a new reality. And right.
Hmm.
And so when you say, so when activity is happening in the GTA, help me understand. Is that people buying up? Is it people still coming into the community? I mean, what's that? What does that look like? Because I mean, I know we're getting a chunk of people leaving.
Yeah.
So
Yeah.
where's everybody else replacing them from? I guess.
Well, again, it's interesting. We did. I contracted our first ever rated home survey because, as you probably know, some of the other brands over the years have published their, whether it's consumer price
Yeah.
survey
Yeah.
and so we wanted to go out to the market and say, look, what are you people thinking? Well, where's your next move? And so the headline was that the pandemic driven exodus we found was overstated.
Hmm.
You know, only 18 in that survey, only 18% of Ontarians considering selling their homes were going to move to a smaller community. So
Wow.
that sort of is very different than what the media and maybe the realtor community in general were saying, which is, hey, everybody's leaving. Look, the pandemic certainly provided fuel to an already overheated market. And what
Yeah.
people have, I think, avoided talking about is demand. Yes, we're supply side short, but the pandemic pushed demand to peak levels. And that's
Yeah.
what I think created a lot of this. And then also, big companies saying, we'll never go back to our offices in downtown Toronto. And so I personally know, it's all anecdotal, but I personally know lots of people, as you say, who bought in Cobourg, Port Hope,
Yeah. Yeah.
Port Perry, Kingston.
Yeah.
But what's happening now, of course, is that the companies are saying, we'd like you to come back. Now what?
Yeah. Yeah.
So, so I don't think it was I think it was overstated. I don't think that you're going to continue to see that. But I think it also, Luca, pushed people in our respective age groups to think earlier about retirement, take advantage of where prices are at, and say, hey, I'd like to go back to Kingston or Port Hope or wherever and enjoy a different quality of life.
And I think that, and so a couple comments and the things. So I mean, 18%. If you're talking 7 to 10 million people, it's still 1.8 million people. So it's still not an insignificant number of people.
Exactly. Sure.
But you're absolutely right. I mean, I had a couple, and the husband reached out to me, and I showed them a property on the weekend, and his wife ended up being the daughter of one of my longest time clients.
Wow.
And they're been in Toronto. She's the eldest daughter, and they have a small granddaughter now. And it's that same thing. Do we want to be closer to family? Do we want to be in this community that she grew up in, that we know things about, and all those kinds of things? So
Right.
So. But I also know clients here that have condos in downtown Toronto, and they use them as pied-à-terres because they wanted to go for weekends. I mean, let's face it, still people I think are still going to come back. New York City's not going to die. Toronto's not going to die. The theater district's going to come back. The distillery district's going to come back. People are still going to want to come into a hockey game, a basketball game, a show, all that kind of stuff. And I think now that people are starting to feel a little bit more safe, or at least safer, more, I guess, confident about the health conditions. It stands to reason they're going to come back. But you touched on, it was one of my questions, because you've done commercial real estate. It's not my bread and butter, but I do it, and I like to think I still know what I'm doing in it. But this whole office building thing, I mean, are there just ghost towers now? What's happening there?
Well, it's interesting. I was in Ottawa a few weeks ago, and looking out from my downtown hotel room across the street at the office tower, it was completely empty. I was looking right through all the floors. It was, and downtown in Ottawa was quiet. It was like one of those movies, where something had happened and the world had gone, whatever, aliens, I don't know, and Toronto for a while, it's still very quiet, but what's interesting to me is I'm hearing more and more from staff, from colleagues, from people that run other businesses and companies that we work with. Staff want to go back to work. They want to see eyeball to eyeball. Zoom has been fine, but it doesn't allow for that same human to human interaction. Mm-hmm. And, when you run a business and you rely on a team, even yourself, if you're running your business, you have a team, you need to once in a while sit down and communicate, not via Zoom, in person.
No.
And so I think two things will happen. One, there will be a return and people are being called back. But two, what it has done is pushed companies, including ours, to think about how we're going to use our space and our workforce going forward. And so maybe more flexible work hours, maybe more flex space. But I can tell you, we've actually increased our employee count. I'm not talking about agents. I'm talking about employees.
Right. Okay.
We just in March, when the pandemic hit, moved into a brand new space after having spent huge amount of money. But I'm already looking at it going, I'm not sure I have enough. So I think you'll find companies are going to say, you know what, our business has changed, but we've done very well, and we want our people back. So,
No. Have you heard any grumblings about potential repurposing of any of these things? And if so, what ideas have been floated around?
Yeah, some of them. You're starting to see, there were a number of those companies, as you know, that that provided office hoteling services, and Regis, WeWork, and, there's a number of them. I mean, they're changing how they're doing things, and other companies are starting to rely more on them. So that's where, I think you'll see some new ideas come out. But I can also say that, look, the banks and insurance companies want their people back. Investment companies downtown say, hey, we need you back in the office.
Yeah,
it's happening. And
yeah,
it's going to be challenging because, people are also saying, well, what if I don't want to get the COVID shot? Do I have to come back? How does that, so that adds a whole other layer of complexity. So I think for the remainder of this year, there'll be some adjusting. And then I would say 2022, we'll see, assuming we don't run into another kind of pandemic, we'll see a return back to some quasi-normal.
Okay. And so in your mind, and, given what you just described and the stats that you have access to, because that's sort of what I said and I mean, this cooling off that you touched on earlier, and I'm glad you mentioned it because I did see that in a news clipping somewhere or whatever. And I agree. I said the same thing is,
right.
Here we've experienced 40% price increases year to date. Right. So even if it dropped by half, we're still at 20, you're still at 20% appreciation, which is still, and so last night, for instance, I listed a property. The model now is listed on Wednesday or Thursday, hold offers till Monday or Tuesday, and have the weekend to get everybody through.
Right.
And, we had 15, 20 showings, but only 3 offers showed up, but yet, listed at $550, sold for $610. So job done, but I think it also speaks to the price point too, right?
Yes,
I've got another property in the 800 plus range that's getting slow traction right now, right? And so different demographic, different buyer thing. And I also think though, it's summertime now, historically in any market, summer months are, not as robust because people's priorities are changing. And they're especially now that they're got the ability to go outside and with double shots to go do things safely, or at least as safely as they can be. I think other people's priorities are changing, right? And not to say that there's still not activity, but
You're right. See, last year, what we saw was that there wasn't a spring market because as the whole pandemic thing was unfolding, things literally got shut down. So that shifted to this, what would have been a typical summer. And then it ramped up even more. People figured out how to do their business under the new rules. And you're right. So now we're back to a little bit more traditional. And look, there's fatigue, buyer fatigue. People are fed up, tired. They want out. You're right. More traditional, more typical summer where people are saying, you know what, we have a cottage. We're out of here. We're gone.
Yeah.
So, and I can tell you, looking at our incoming deals, incoming deals are down 14% month to date versus last month. But I can also tell you they're still record setting. So, there is is this more traditional summer? Yes, it is. It's a more traditional summer.
Yeah.
So
good point.
It's not panic. People, again, media needs to stop saying there's a bubble. No, there isn't.
Dude, don't get me started.
And my only worry, I will tell you, is inflation and employment. Because, I don't see interest rates changing too much. But look,
so elaborate on that then if you will.
There have been some industries. My wife's in the hospitality industry. Their hotel, they're struggling. Have been, they were down to like 15 to 20% occupancy rate when typically it's 80 in the summer, right? Yeah. So there've been, layoffs, and these are quasi-permanent layoffs. And so between that and prices jumping for construction materials and everything else, that'll start to filter through, and then that will also have an impact and make life a little more difficult for everybody. So to me, those are the worrisome things for business.
Well, and I'm going to add another variable to that, which I'm hearing grumblings about here in Kingston, because Kingston, if you remember, we have probably more restaurants per capita than any other city in North America, I think was the number the last time I checked. But no one has confined staff to come back.
Right.
And so now you talk about hospitality. Yes. Who's going to come back to do housekeeping, to do
it's very difficult.
Work, to do,
yes.
Right?
Yes, you're right. No, it's not just something that's happening in the U.S. It's happening here. And again, the good and the bad of the CERB and all the other, support payments. But, now people are saying, man, I'm good. I don't want to go back to that, or pay me. So that's where that whole inflationary kick comes in, right? It's suddenly you're no longer at minimum, you're now at $25 an hour plus tips and whatever else, and that's tough.
Right. Well, now all of a sudden, like you said, now your cost of goods goes up, so you the product that you're going to be serving or delivering has to go up. The same degree.
Yeah.
Going back a bit, you talked about investors, because I know we've had a migration of investors here. That trend predated COVID, way predated COVID. I mean, I operate a property management company, and we have a lot of absentee landlords. And before, it was a function of investors just purely being priced out of their marketplaces. Like, you just can't get the same 3-unit building or whatever building in your area where you can get it here, and then make the math make sense. But now you're saying a lot of more foreign investing return. Are you seeing that local investing happening as well again in your market?
Not to the same extent. I would say it's it's there, but honestly, the influx of foreign capital and foreign buyers is it's astounding. It's one thing I have to be very honest. I'm trying to get a grip on is how, why, where. I mean, it's and that's not easy to find out. So
because then they're not even landed immigrants. They're not even residents. They're just purely park. Correct. Like the quote, the saying that started a couple of years ago is parking money is apparently what.
Right. And, what may have an impact at some point, as it did in Vancouver, is, when there's a vacant unit tax, right, that's being contemplated. So that'll, certainly have an impact on some of it. But, with the pre-con, for example, I mean, there's one company in Toronto, I won't name them. They're a very successful brokerage. Honestly, they have employees who work abroad in several different Asian countries, and as soon as there's a new project, they get the marketing material, spread it around, and then send back all their worksheets for whatever number of units. It's astounding.
That's unbelievable. Well, and I was listening to a webinar a couple of weeks ago. MPAC hosted it, and the TWII forecaster, he was really smart. I forget his name now, but
Jason, was it Jason?
Yeah, I think you're right. Yeah. Redheaded guy. Yeah. But they were saying how aside from this, non-resident investor or just absentee investor, there's going to be this huge rebound and influx of immigration back into the province. Where people, the pandemic showed people that Canada, hey, it was a good country to be in if you're going to go through this again, right? And stuff in terms of healthcare and vaccinations and how, So I think that's going to come back and be another shot in the arm to this.
Well, and that's a very good point, Luca, because, that hasn't even kicked in. So when people say, the market's going to come to a screeching halt, there'll be a bubble burst. Hey, we haven't even tapped into that, source. When that taps, as it's starting to come now, That's another here. That, I mean, that always was Toronto and GTA area. I think were always good for a couple 100,000.
Yeah.
Immigrants to flooding into the area, and
Well, and that was their point. It used to be that on an annual basis, and it was happening every quarter. Like they were getting 250 to 300,000 a quarter now. So you're talking a million people on a year-to-year basis, right?
Yeah.
So and they have the means, right? They're coming to open businesses, they're coming to live in homes, they're coming to buy homes, they're coming to buy investment properties. Yeah. No, we see that happening here too.
I'm sure.
Even I've got a small commercial space. We've talked about it before for lease now, and we've priced it at the highest net rental rate ever in the history of downtown Kingston, and I still get inquiries from everywhere. So there's people out there that want to do business, obviously, and feel that there's going to be a need for it. So, well, I think, you know what, John, I was going to ask you for your pontifications and projections and forecasting, but I think we pretty much covered everything. But any last insights that you want to offer or anything, or?
Oh gosh, that could be another whole challenge. No, I don't think so. I think, look, one of the things that has happened, I mean, I watch where our transactions are coming from, and honestly, it seems like realtors now are truly embracing the I'm licensed to sell in Ontario. I'm not saying that's a good thing, because I would much prefer that they would refer to folks like you and others, and in areas where we aren't, I would call situated, right? So, but that just seems to be par for the course. So it comes with added challenges and compliance issues and all kinds of other stuff. So.
No, I know. And we're still seeing that here, the surge of, not every other, but I dare say on a daily basis, I bet you 20% of the sales are non-member out-of-town agents.
I mean, it's good and bad, right?
It is.
I always remember, back when I was working there, that, local sellers and owners often would say, hey, maybe we could get one of those Toronto guys to come and pay us too much money. So I'm sure that hasn't changed, but
no, it's gotten worse actually. So
there is
the expectations are even greater now, actually. But well, listen, John, I want to thank you so much for your time. I know you have a busy schedule all the time, and I wish you continued success. And we'll circle back and probably have a revisit just to see if we were right or wrong or whatever happened. Right?
Absolutely. Look forward to it. Thank you so much.
Thank you. Say hi to Pat, and I'll talk to you later.
All right. Okay. Take care. Bye, Luca.
Bye.